We are live on the first episode and recording of Fund Friday, which is under the Capital Spotlight podcast umbrella. Today, we have a very fun and special guest. I think this is really important for the industry. I think this is very important for the direction of it. Today, we have Travis on. Travis is the founder, I believe, is that correct, of
That's
Tribevest?
right. Yeah.
Right. So Trivest is a fund-to-fund structure, but they also do so much more. And we're going to unpack that today. But I want to say in August, all of a sudden, so many of our capital raising partners and the industry started to ask about, hey, what's this fund-to-fund conversation? What's this fund-to-fund this? What's this fund-to-fund that? And I thought for the start of the show and for future repurposing purposes, if you will, that Travis would be the ideal person to kind of come on, unpack the need for the show and how to solve for the changes in this market and the changes of the industry. As we both know, and we all know who are watching this, it's always changing. The SEC is always changing its compliance. So to keep everything above board, this is likely the future of the world. And we want to have you kind of debunk anything, explain why you are doing what you're doing and all the value that you're creating. So without further ado, the first guest on episode 1 of Fun Friday, Travis. How are you today?
Wow, Craig, thanks. I'm doing wonderful. It is an honor to be your first guest. That means a ton. And yeah, thanks for having me. And excited to be on this podcast and having this conversation with you. This important conversation for the industry. So
Right.
thanks again.
Yeah, absolutely. And we met face to face. We've been Zooming, emailing you and Seth, but then we fortunately, for months now, and then we fortunately got to meet face to face at our summit event, which is great. And real quick, we're also going to have our Lone Star created a new document. So if you need a new document for our fund to fund program, email me at craig@lscre.com. Once again, email myself for the fund to fund document, craig@lscre.com. And then additionally, we're having a big webinar that Rob will be leading and spearheading on November 30th at 2 p.m. Eastern. Should you want to learn more and unpack it and see how it really works in real time with a deal and what the economics look like. But with that said, Travis, why don't you give us the reason behind, the company, the idea for Trivest, and maybe just unpack what you guys offer and the need for it.
Absolutely. Yeah, thanks again. And again, it was awesome to be there in New York City at the World Trade. What a venue, and what we all see in terms of a brand with Lone Star was even more apparent in person. So again, great to meet you, and just so excited about this partnership. Again, thanks for the opportunity to introduce myself, founder and CEO of Tribevest. And really, the origins go, 15 years back, and it was a personal journey. It's a journey not unlike most investors' journey, right? Most of us, as we're trying to figure out how to find financial freedom, build wealth. How is that? What is it? What's that look like? And 15 years ago, I was, investing in the private or public markets, and realizing that to find financial freedom and to build wealth, I was going to need to do things differently than just have my W-2 and investing in the stock market. And everybody we knew that was living their best life, building wealth, they were business owners and real estate investors. So my brothers and I went on a fishing trip, and on that fishing trip that I say we couldn't afford, but we were there anyway. We talked about how to help each other do this, because breaking into the private markets, if you're not, don't come up from a family that does that, they certainly don't teach it in school. You need capital. All those things are really barriers of entry. And, we really, as a point of necessity, turned to each other, me and my 3 siblings. And we said, listen, how we're going to break in and learn how to invest into real estate is we're going to do it together. We're going to leverage the power of the group. And that's what we did. We formed a family business entity, opened up a business bank account, and started to pool capital. And within the first 12 months, we were participating in a real estate syndication in Pasadena, California. We kept reinvesting our cash flow and our profits and our proceeds, as well as continuing to put capital into this little entity. And of course, we started to call it our tribe, and our tribe account and our tribe business. And one investment led to another, led to another, and led to another. And we look back now, Craig, and we realize that by pulling our capital, investing together was the key to unlocking a future that none of us would have achieved on our own. And over the years, it really changed the trajectory of each of us as individuals and as in our collective families. So that was the origins of it, really trying to figure out how to build wealth. And then about 5 years ago, being in fintech, in working in that space, and people coming up to us and saying, "Hey, can you help us group invest so we can do more, we can go further," was when I decided to make the leap and start up Tribevest and make it easy to do group investing, because it before Tribevest it wasn't. So that's the origins and really the foundations for where we are now, which is really solving a big industry challenge, which is how can investors advance in their journey and become capital partners, help raise capital, help bring people they know along into this amazing world of private investing into real estate. That's hard because of the regulations that are out there. And then on the lead sponsor side, similarly challenged. How do you scale your business? You scale your business through capital, but it's hard to scale capital through capital partners right now, which is an awesome way to scale capital. So how do you do that safely? How do you do it at scale is the big problem that the industry is solving right now. And we're happy to be a part of how that's being solved.
Thank you so much for the context there and the origin story. I really appreciate that. And it is always fun to hear, grassroots stories that turn out to be something larger and really catch wind. Often some of the best companies come from that place. So that's great to hear. So tell us about all the services that you provide. And then also, before we get into that, Tribevest was unique before because a lot of syndication groups have minimums, right? So some of them are $50,000 minimums. Some of them are $100,000 minimums. But Tribevest, I think, before the fund-to-fund program really got going, folks could maybe potentially, invest 25 grand or whatever it may be into, a group, into a tribe that would maybe solidify that, $100,000 or $50,000 tranche, correct? So was that, kind of how it got going? Was that kind of the premise of how it worked there, and then it kind of evolved into something else?
Yeah, you're spot on. So what did we need to build to make group investing easy, right? And you think about it, that's a hard thing. And for a company that's on its way to being $1 billion company, granted, or the early stages of a future $1 billion company, it's important you have a really big, hard problem to solve. And we're glad to be solving it. But you think about all the complexities that come with a group coming together and then coming together financially, all those things is a big challenge out there. all the things that need to happen on their own, not hard. But when you bring it together, it's a challenge. So, initially that's what Tribevest built. We really built out the infrastructure, the banking and the collaborative infrastructure for groups to invest together. And so, you can come on, you can build your charter, your business plan. You can add your members, invite your members, and form a LLC. We're integrated into all 50 states, so you can file your LLC in all 50 states. You need an operating agreement, right? So we provide a template, and you can kind of configure that appropriately for your group's application. And then within minutes of getting that back, we're able to open up an FDIC insured business bank account. So I talk about it like it's so easy, but you think about it before Tribevest, this is, weeks, months, kind of to pull something like this together. And we literally have groups that are launching and forming banking in, 3-4 days. And the only thing holding us up there is, waiting for the LLC to get back from the Secretary of State. So, we've built all that infrastructure, a place to manage your cap table, right? No more spreadsheets, right? It's all right there. And transparency, a very big part of how this all works. Of course, what I'm talking about right now is the foundational early days of Tribevest was all active members, right? To your point, all active members, meaning we're all in this as partners. It's a partnership, and we're coming together to get over some type of threshold. And you nailed it. It's, there's investments that are $100,000 to get into, $250,000 to get into, $1 million to get into. So how, if I don't want to put all of my investable capital into a deal like that, how can I diversify? How can I get access into a deal like that? Well, coming together to form a joint venture really is what it is. And that's the two early products, right? You have your joint venture for the real estate. So you think of a more traditional, hey, we're going to do a short-term rental, we're going to do a flip. Great application for Tribevest. Again, an active joint venture with members. And then, of course, the application that you're talking about, hey, less moving parts, but still equally important for us to come together, formalize this, and invest into a deal that we maybe wouldn't have gone into on our own. So those have been the two big applications, and continue to be, foundational in terms of what we've done. But what was next for our infrastructure that we had built was, we started to see what was happening here, right? And you talked about this a little bit. You mentioned in August.
Yes.
I would say a little bit earlier in this year, even going back to last year, we were starting to see a lot more of this. But there's two things happening, right? Again, we're seeing an awesome movement. It's a movement. It's a shift from people that assumed that they were going to build wealth and find financial freedom through investing in the public stock market, and have realized that no, they have to go into the private markets, all the advantages that come with real estate, right? How do you tap into those advantages?
Yeah, because most people, to your point, most people kind of see, beautiful apartment complexes, or, whether it be class C or B, units that maybe aren't the sexiest, but they know that there's a lot of value associated with that, or mobile homes, whatever it may be, but never really figured a way, or maybe just mentally didn't comprehend the fact that, oh, well, you actually could, fractionally own that, or have, interest in these investment opportunities, right? Or self-storage, whatever it may be. For so long, I think a lot of people just saw that, oh, well, that couldn't be me, I'll just stick to buying houses. But now with, syndications, you get to be, in a front row of having the opportunities to do that, right? to your point. So that was, a big shift. And it seems as if the alternative investing solution will become a lot more mainstream and has become more mainstream. But as years progress, it will certainly become, more of a normal allocation of one's capital when an investment is possible for said individual.
100%. It's become more accessible thanks to companies like Lone Star Capital, right? They're going out, they're the experts, and they're putting this together. And of course, as part of that, they need investors. And so how do we make that accessible for the rest of us, right? And the government is also encouraging that. They want more Main Street investors out there. And so that's a huge movement that's going on. It's super exciting. And then one step further of that is, hey, I've taken the time, I've unlocked this amazing thing of being able to passively invest as a investor into these deals with these awesome sponsors I've built relationships with. They're great deals. I can see firsthand the tax advantages, how much cash flow I can make, not to mention the appreciation, everything that comes with real estate, and as a limited passive investor. And now they've invested it, they've become good in it, they've built relationships with the companies like Lone Star, and their network, their family, their friends, their community is asking them, hey, can you bring me along to this? And that's that accessibility. That's part of that movement. And then the challenge becomes, how do we help those leaders, those people that had the gift of going first and are motivated, incentivized, see this as a way to really help build wealth for their families, but they can't do it as charity. They need to do it in a way where it makes sense, and it's an awesome service to all. So that became kind of, well, how can I use Tribevest to do this? And the answer is like, yeah, you can use our foundations, but you really need to work with a SEC attorney and a securities attorney to be able to do that. And of course, that becomes a non-starter for so many, right? And we kept kind of seeing this energy of people that wanted to do this, and we're in a great position to do it. And it's just that barrier to do it was so hard. So that's happening, right? We're seeing this kind of this ground up swell. And then, really from the top down, we're also seeing something happen, right? We're seeing, people getting more, with the economy shifting, not everybody's winning. You really need to be a well-run organization. You need to have awesome underwriting. You have to, like, all these things now. It's not as easy to put together a syndication and make money anymore. So it's just natural that we're seeing more people not having the returns that they want, right? So investors asking questions, and it's really putting everybody in a position, and I think this is healthy for the industry, to just get really more tight and safe about how do you capital raise and who are you capital raising with.
Right.
And so the lead sponsors are, we've been using a CoGP model out there for a long time. And the truth is it just doesn't scale. And that's, you can have CoGPs. It's awesome. And that's legit and everything else, but it's not a way to scale. You can't have CoGPs to the nth degree.
Well,
right?
and I was going to ask
And
about
so,
that.
yeah.
So, with CoGPs, there's compliance associated because there's rules associated in a CoGP, and not everyone kind of hits those buckets or has the time to do it, but they're kind of classified in there, right? So why is CoGP, I guess, could you explain, not the correct route, and why is the fund of fund structure the correct route?
Yeah, great question. And of course, not a securities attorney, so this is not advice or anything, but I have obsessed on this for about 15 months now. So I am out there seeking kind of answers to these questions. And the question is why is the CoGP model not a good model, and why is the fund to fund the good model? And I'll answer that a little differently, or ask it a little differently, or I'll position it a little differently. CoGP model is a great model. So it's true, it works. It only works to a point, though, right? Because as part of a CoGP, you need to be bringing different value and services to the business, not just capital raising, right? Capital raising, absolutely a part of it. You want all your partners doing capital raise, as all of the GPs doing capital raises. So that's real. I mean, that's of course part of the deal, but making sure that those co-GPs are true co-GPs, and if they are, it's great. Okay. I think what we've seen out there is just kind of, how do you scale that, right? Because everybody sees that there's all these people out there that want to be a part of deals, have the ability to bring capital to the deals through their networks and through their communities. And so there's this, hey, another co-GP, the problem is that you run out of jobs for everybody to do. And all of a sudden the co-GPs start to look like capital raisers only, right? So I just want to specify, a true co-GP, awesome, right? It doesn't scale.
And it sounds as if what we're alluding to here potentially is the thought that, people who were called co-GPs will actually just were capital raising, but the fund to fund structure is set up accordingly. So you're just raising funds, and there's a due diligence fee, I think is how some people call it. I don't know if that's how Tribevest classifies it. I believe that's how we're classifying it in our new structure. Is you get a due diligence fee as opposed to getting paid for your services, and then the fund also pays out the fund manager as opposed to the sponsor paying out the capital raiser co-GP. Is that correct?
Right. Yeah. And you think about it from the lead sponsor perspective, it's the fund to fund is so much more clean, right? It's one line on their cap table, right? It's another limited partner. And but you were getting into, co-GPs were used to being incentivized as part of as part of the GP, right? And that's motivating, incentivizing, and makes putting work and effort into everything worthwhile. And if they're not that, how does this make sense for them to go do really hard work? I mean, bringing a ton of value, and not be compensated by the lead sponsor or from the GP. So that's a little bit of this transition that's going on. And the answer is the fund to fund pays that fund manager, right? And therefore, really what needs to happen here is a really good negotiation between that fund to fund and the lead sponsor to be able to make this worthwhile. So a few things happen, right? Number one, the investors of the fund to fund are getting a good deal. Like, they're getting service, right? So the economics really have to work out. Two, is the fund manager getting appropriately compensated for the work that they're doing to pull this all together and provide this service? So that's two. And then third, what is the cost of setting up this entity safely, right? And working with security, SEC attorneys and securities and all those things. And that's been a hard thing, like working out those economics, really, really hard. And but if you work them out, it becomes how you solve this challenge. Again, fund of funds has always been kind of a proven great way for lead sponsors to work with partners, right? And not have to have them part of the GP. We didn't invent fund to fund, right? It's always been a good thing. The hard part is how do you make this work at scale? And that's where Tribevest and quite honestly, Lone Star come in to really start to solve this for the problem, or solve this for the industry.
Right. And with that
But that's
said,
so anyway,
yeah.
just like getting back to your question, hope that
Yeah.
clears up. True CoGP is great. Bad, it doesn't scale. It doesn't scale.
Yeah.
Fund of funds always been the solution, but now the question is how do you do it at scale?
Yeah,
So
and
fund of funds,
to my knowledge, CoGP is just, it's great when it's effectively and used correctly, but it can be slightly abused from an industry perspective from what I was reading and whatnot. And you don't want to, toe the line of, having the SEC down your neck and auditing everything you do. And seemingly the SEC and those who are controlling everything have allowed the fund of fund structure to be rendered as compliant and to let it be used without there being any risks associated with it. So we've been using the fund of fund structure. Naturally, we've been using very creative ways, JV partnerships and whatnot to accommodate our capital stack. But us really doubling down on this is going to be very beneficial for Lone Star Capital and everyone associated, and it's going to allow a lot of partners who frankly we couldn't let raise money for us because they couldn't bring enough to kind of hit our buckets. Now, hey, you can bring in whatever you want to bring into our deal via the fund of fund structure with no issue. It's just what economics do you want to pass down to your LPs, and does it make sense for the fund manager to effectively want to do that based upon the costs associated with running the fund, which we'll get into. My follow-up question to all the great information you laid down, and we've got about 20 minutes left here. I want to be respectful of your time, so we got to be concise on these answers here. But what makes Tribevest different from other service providers that are currently in the marketplace? So what I've understood is that you guys are a one-stop shop, so which is really useful. But in addition to that, economically speaking, you're very, very competitive. So there's of course other people out there, but it seems as if your price is one thing that makes you guys stand out really nicely, which I'll let you get into if you'd like to. But also you and Seth are quite lovely to work with. So, you're good people. Of course, the tribe component of it with having less people kind of come in. But maybe from your perspective, could you explain, the service you provide and how you're different?
Yeah, no, thank you for that. Yeah. So how are we different, and how does this work, right? So before Tribevest, focused on solving this gap, this challenge. All the other service providers are still out there, right? There's you almost always are working with a securities attorney, right? And there's ambiguity that comes with that, and costs, and you're really starting at 15K to be able to create any type of security. I mean, that's what a fund to fund is a
And
security.
15 grand, if you're raising $500,000, is a very, very large drag. I've heard people being quoted for 25K, right? So drag meaning the ongoing fees, the costs associated, the due diligence fee, either. So, typically speaking, the LPs in the fund pay a due diligence fee to the fund manager. But let's say if you raise $500,000 and it's 2% fee, well, that's 10 grand. If it costs 25 grand or 15 grand to create the fund, well, you can do the economics of that. That means you're basically in the red to raise money for an offering. So that makes it very challenging. And I think that's maybe one thing that you truly solve for. Is that correct?
That's right. I mean, how do we solve this problem and fill this gap? Whatever it is, right? It has to be safe. Okay, we start there. Two, it has to be turnkey. Okay, it has to be turnkey. No loose ends, no mystery, timelines tight, these things, and we'll talk about why that's important. But it has to be turnkey. And three, it has to scale. It has to scale. It has to scale for the lead sponsor, and it has to scale for that fund manager, right? To be able to not just do one, that doesn't change my life. 5, yeah, that's pretty good. 10, 20, we have fund managers that are doing 20 plus of these, and you could never do that without having a turnkey solution like ours. So yeah, great point. And how are we different, right? So how are we able to do that? So before Tribevest, the market was expensive, 100%. It just is. It's, you know, anytime you're working with an attorney, it's expensive. So that becomes kind of a non-starter. Number two, the time, right? So to go into an engagement, talking to a securities attorney, you know, putting all these things together, you've missed the deal, right? So there's a prerequisite to these fund of funds out there right now is that, hey, if you're interested in doing a fund of funds, you better have made your investment, figured this all out, and then you can start looking for deals, right? But don't look for deals and then try to pull together a fund of fund, because you're going to miss the deadline, right? And it just doesn't work. So economics made it a non-starter, and then the amount of time required you to build this fund of fund first, right? And there's a lot of people that have done it, and it's great. It's great. But what Tribevest has done is, number one, we've made this turnkey so that you can be, you know, doing your due diligence on a deal, figuring out the fund of fund economics, and say, I'm going to raise $500,000 or $1 million for this, and let's go, right? Which is when Tribevest springs into action. And within the first week, we have your fund documents ready for your review, and therefore ready to onboard your investors to sign the docs and wire the funds. So within that first week, we're technically in a position for them to go. So think about that. 1 week after I've, you know, rallied my investors, qualified the deal, I can actually be ready to close my fund of funds. Of course, you know, you need to count on another week to kind of get all your investors in there. We help with that, right? Or another week. We say 3 weeks is a good kind of standard, like we're in good shape kind of place. We can do it in 2, we can do it in less, but you know, you want to be able to put it in again, but it's still game changing, right? So those are the big things. Like, and I'll talk about the cost too. So the economics, we're able to offer the fund documents at $2,500, and then another $2,500 to do the blue sky filings, all the proper filings that are required to do this, to have you be a 506C and 506B exempt entity.
And with that said, for those who maybe are less familiar with this side of the world, or you know, have only been CoGP and have never want to set up the fund of fund structure because it's really annoying, it's cost burdensome, or you have to figure out how to independently source everything. Right here, guys, is your one-stop shop to theoretically get everything set up, get everything compliant, and make things very streamlined. I'm personally someone that I don't want to think about any other moving parts. I want to do one thing. I want to do 2 things. I want to find the deal. If I'm a fund manager, I want to find the deal, and then I want to raise the money. So what Tribevest is that intermediary, it seems, from what you laid out, where you have the deal, you have the money, and then you pair it right here in one spot. Is that fair to say?
Yeah, I think of us as a conduit, and you know, the back office, right? You think about it, you know, we've really gotten away from saying we're, you know, a software as a service, which sounds sexy, and, you know, all this. And that's another big differentiator for us. We're very proud to do the hard, to do the dirty, to do the messy, to do, you know, all the things that are required to do this the right way. That's what we're doing. We're doing the back office aspects of this, the documents, the filings, the bank accounts, the cap table, you know, the banking, the distributions, the taxes, all those things, again, add up to non-starters for this really exciting movement out there of, there's people that can bring $500,000 together and $1 million, you know, and they can do it quickly, and everybody wins, and it's a huge value. But how do you empower them? And kind of the missing link is this. And I'll just say, you know, until you mentioned Seth Bradley, came on, he's a partner at Tribevest. He's a securities attorney. He really was this unlock. The missing piece of this was that how do we do this? And I'll just say this, Craig, I want to point this out too. So we've been talking a lot about Tribevest. I've been obsessing on this for over a year. And my conclusion is no one company is able to solve this problem. And so part of the equation here is partnerships through lead sponsors, right? Because you start asking, wait a minute, how are they able to do this at a third of the cost? How are they able to do it at a third of the timetable, right? Like, what's up? And the answer is we can't do that on our own. It's not possible right now, okay? But what we've learned is by going to the leaders out in the market, the lead syndicators, the lead operators like Lone Star, who operate, have a certain track record in a way they do business and reputation out in the market, by partnering with them, we can really design a program that enables Tribevest to look like heroes on the back end, right? Because the only way we're doing this is because Greg has and team has put together a plan that lays out like, hey, this is how you work with the fund manager. Here's examples of economics. It's up to you how you do it, but here they are. All those things need to be there in order for this to all happen really smoothly. And then last that they've brought together, right? And is, oh, by the way, when you're ready to go, we're partnered with Tribevest so that they can deliver this, and you can, ensure that you're going to be able to do this in the timetable that we're talking. So anyway, the whole solution here doesn't happen on Tribevest alone, because we've tried.
Right.
And the only way it works is by, through partnerships with awesome partners like Lone Star.
And the biggest thing for us is, and what we'd like to do is get ahead of things and be on top of things, right? I think it's, one thing that distinguishes Lone Star for sure, and that said, we want to have all of our ducks in a row so we can let you cook, so we can let you look great, so all parties can feel confident. And if we need someone to be onboarded quickly and quickly get them into our system and have their equity come into our deals, there's no guesswork or mystery. It's all spelt out for you right there. So that's the important thing. So real quick, I just want to get into, you guys are a turnkey solution, as you mentioned. You do the blue sky filings, you set up or have basically a boilerplate agreement for how the documents go. If I'm not mistaken, you also, you have the attorney docs, and then you get K1s out that get distributed from that fund to the respective members of that tribe, that, LLC that fund manager creates. So let's say if the fund manager raises $500,000 and you're an investor that has 10% of that, so you put $50,000 in that. You mean to tell me that Tribevest and your people allocate that for the depreciation perspective and the tax reasons, that's all set up through you guys? Am I understanding that correctly?
Yeah, I mean, thank you. Yes. So you think about what we spent a lot of time on is just setting this up safely and in an economic and easy way, in a good time frame way. That's just part of it, right? And we've also said, look, we didn't invent the fund of funds. Fund of funds has always been kind of this solid way of partnering, right? The problem with fund of funds is it's hard, it's expensive, it takes a long time. It's not accessible. It's not accessible. And we just talked through kind of how Tribevest makes it accessible, economical, safe, and you can do it in a fast, easy way to set this up, right? So that's great, but guess what? You're the fund manager, and these are 5-year plus hold periods. You still have, you have to administer and manage the fund and your investors. So again, before Tribevest, that becomes another non-starter. Like, wait a minute, I'm not looking for another full-time job here. I'm trying to get out of my full-time job, and this doesn't seem to scale, right? Well, enter Tribevest. So we talked about the $5,000 to set this up, right? And then we charge an annual amount to administer all these different things that Craig started to mention, and I'll run through them real quick. And that annual amount is based on how many members you have, because based on the members you have, there's certain hard costs that come with that. So it's $2,000 for up to 10 investors in your group, $3,000 up to 20, etc. So that's how it goes. And what do you get with that? Well, you get a place for your investors to go and see their investment, set up their distribution preferences, see how many, what was their last distribution, what's their total distributions, what percent of the fund, that type of thing. So very kind of normal LP experience that they might be used to, right? So that's one. But the fund manager, they got a lot to do, right? Well, we've already done a lot of the heavy lifting setting this up. And then it comes down to, well, distributions. Lone Star is sending us our distribution. What do I do, right? And you think about just kind of normal banking applications and how you'd have to handle that, and working with your spreadsheets and things like that. Well, that's all integrated. The bank is integrated into Tribevest. Your cap table is integrated into Tribevest. So when that distribution comes from Lone Star, the deal, we can easily populate all your members' appropriate distribution amounts based on your terms, based on the cap table, everything else. And we can really automate that, either empowering the fund manager or working with a client services account manager to do that on that monthly, quarterly basis. So again, you think about scale, right? It has to be scale. Tribevest isn't interested unless there's scale, safe, turnkey, and scale. And I think fund managers are realizing that, gosh, I can't do more than a couple funds. Well, now you can, right? With this type of service. You mentioned K1s, right? Always kind of a big thorn in the side and one more pain in the neck. Again, we love the messy, we love the hard, we run to it. And you're going to get one K1. The fund of fund is going to get one K1. They're in one LP. They're getting one K1 from Lone Star. Tribevest services, again, leveraging the cap table and ledger, are able to quickly create all those K1s and distribute them to all the fund-to-fund investors. But yeah, that's also an important element. And again, another reason why fund-to-fund's always been a solution, but it's always been an inaccessible solution. And now, again, in partnership with the lead sponsor, with Lone Star, Tribevest and the lead sponsor are really providing a truly turnkey solution.
So let me kind of just summarize this then, and please fill in the gaps for where it's necessary. So from a fund manager's perspective, why is there a benefit being a fund manager? And then specifically with Tribevest, it is the turnkey solution. Get everything set up so you don't have to source everything yourself on top of your busy job, whether you're a W-2 person raising extra money for kind of a side hustle that hopefully turns into your kind of main career path, right? So it's a one-stop shop. And then, of course, obviously we're creatures that need to be incentivized. So there's a financial incentive there because the price is completely more economically sound than it would be probably elsewhere in the marketplace, if that's fair to say. So from a fund manager's perspective, it's the one-stop shop nature of it, and then also the economics. Would you say there's any other big benefit to the fund manager's perspective working with Tribevest?
I think that's it. At the end of the day, it helps you on your journey, right? And we've all read Rich Dad, Poor Dad, and I think that's one thing we all have in common. And how do we adventure from our W-2s and building true wealth? This is a vehicle tool that that's accessible now, and it's because lead sponsors like Lone Stars are putting together terms specific for you where this makes sense. And now the question becomes, cool, but how do I do it? And Tribevest does it economically and in a turnkey way, and in many cases for you.
Right. And
So
then
that's the benefit.
yeah, and then from a sponsor's perspective, why is this great? Well, because now you have a new avenue of people can raise money for you via the fund of fund structure where there's not a big drag. So drag meaning, huge economic burden if you're just raising $500,000 on a deal, which is not an insignificant amount of money. But when you factor out the fees associated that you get from your due diligence fee and everything else associated with it, your drag is now not a financial burden. $2,500 for a blue sky filing for those in the business to know. That's very reasonable. So from a sponsor's perspective, it's nice because that's a little less admin work you have to do because Tribevest helps with kind of the sorting out of the capital stack on that tranche. So it's easy because you get more capital raisers in your deals. You get less that has to be on your plate and manage. And then you're more SEC compliant if you've kind of been in the CoGP structure with people that may or may not have roles associated. Now that burden gets lifted off you. So it's safer, it's more convenient, and you have more people you can raise capital from potentially should you have your ducks in a row. Is that fair to say?
Well said. Yes, it's safe. It's safer, right? It's safer. That's been a big driver for the lead sponsor, right? Absolutely. It's turnkey for your investors, right? They can come in and do this turnkey. You mentioned it. It's pretty cool. You only have one investor, right? And the leads and the fund of fund is now responsible for distributing to those 10 investors, doing K1s for those 10 investors. So that's another benefit. You're just having one investor, and then scale, right? This is you're unlocking, and I know Rob and you guys, like, a big part of your passion in what you do is helping people on their journey, right? Helping them unlock new ways of wealth. And you think about that, that's what you're doing. You're offering an amazing tool for your investor network to build a mini business, to find a new way to build wealth. And it's really a whole new channel that's coming. You talk about from an industry perspective, it's a channel that's exploding right now that this is accessible. And I'll just say, so how do you work with Tribevest, right? And again, I want to point out, you cannot come to Tribevest.com and start your fund of fund. There's no way to work with us. I know this is kind of hard and not intuitive, but that's how we're modeled. We're not like, this isn't lip service. That the partnership is the key to this all working. So the only way you work with Tribevest and to be able to get access to this service is through our lead sponsor partners. And so the only way we would service you in this way is through a handoff from our lead sponsor, like Lone Star and Craig.
Awesome. Well, thank you so much for that breakdown. Thank you so much for being the first guest on the Fun Friday show under the Capital Spotlight umbrella. I couldn't think of a better person to have on to explain the beauty of Tribevest and also partnering with Lone Star here in this one. How can people get a hold of you and find you?
Absolutely. The best way is probably to find me on LinkedIn. Send me a request. Let me know you heard me on this podcast. Would love to connect with you. That's probably the best way to reach out to me. And then the other way, of course, is talking to Craig more about their program. I just like to emphasize that it's their program. We're just kind of the engine behind it. If a fund of fund makes sense for you, you'll probably eventually meet me that way.
Right. And your last name is Smith, correct?
That's right. Travis Smith.
So Travis Smith
Travis
on
Smith,
LinkedIn.
On LinkedIn, you can put in Tribevest and you should be able to track me down there.
Very
We'll put
good.
it on the show notes too.
Yeah, we will most definitely do that as our great people on the back end will be sorting that out. Any final thoughts before we wrap up the episode?
No, just really thrilled, honored, privileged to be your first guest and to be partnering with such an awesome company. I can't think of a better lead sponsor to be kind of part of our founding partnership network out there. So thanks for everything.
Yeah, well, thank you so much. Thank you for attending our event. Thank you so much for being, helpful through this whole process. We really did kind of craft this together. This has been several months and hundreds of emails and an email chain that is taking up tons of space on our computer, but for great reasons, of course. Thank you so much for being on the show, Travis. I look forward to seeing you next, collaborating with you, and seeing where Tribevest goes for you creating this billion-dollar fintech company. There's no telling how far and fast you guys will go. I fully believe in what you guys are doing, and it's great to hear awesome feedback from our partners that have worked with you so far. So that always makes it feel good. And yeah, all that good stuff. So thank you so much. We'll see you next time on the Fun Friday show.
Thanks. Congrats to you and all you do. Thanks.